हेलो गाइस, मेरा नाम है नीरज पांडे और आज ये शॉर्ट वीडियो मैं फिर से बना रहा हूँ। मैं आज इस वीडियो में अपने टॉप 3 डेफी प्रोजेक्ट्स आपके साथ शेयर करना चाहता हूँ, जो मुझे लगते हैं कि इस समय पे सबसे ज़्यादा अंडर वैल्यूड है। ठीक है, तो हम लोगों ने बीएनटी की काफ़ी बात कर चुके हैं हम लोग। तो सबसे पहला प्रोजेक्ट तो मैं बीएनटी को ही बताऊंगा आपको। ये आप बीएनटी के चार्ट दे सकते हैं। ये इथीरियम के कंपैरिजन में है और ये बैंकर एक प्रोटोकॉल है जो एक एएमएम है। आप इसको यूनिस्वैप का कंप्यूटर समझ सकते हैं। तो पहला मेरा पिक बैंकर डेफी प्रोजेक्ट है। ठीक है, इसके बारे में काफी हम लोगों ने बात की है, तो इसके ऊपर हम लोग बाद में आते हैं। दूसरा प्रोजेक्ट यूनिस्वैप है। यूनिस्वैप इस समय पे डॉलर में भी अगर आप देखिए तो डॉलर में भी $2 के करीब करीब चल रहा है। और ये है उसके इथीरियम के कंपैरिजन में चार्ट, मतलब इथीरियम के कंपैरिजन में इतना ज्यादा यूनिस्वैप गिरा हुआ है। तो अगर आप डेफी को मानते हैं कि आगे चल के डेफी का जो ट्रेंड है वो इंक्रीज करेगा, डिसेंट्रलाइज फाइनेंस की जो मूवमेंट है, जिसकी वजह से मैं मानता हूँ कि क्रिप्टो करेंसी में ये मूवमेंट देखने को मिली हम लोगों को, तो यूनिस्वैप का जो प्रोटोकॉल है, जो एएमएम है, वो लीडर है इस समय पे। वो लीड कर रहा है पूरी तरीके से। आप इस चीज को जानते हैं। सबसे ज्यादा वॉल्यूम इन्हीं लोगों के पास है। जहां तक कि मैंने देखा है तो इन लोगों ने कॉइन बेस को भी एक समय पे पीछे कर दिया था वॉल्यूम में, और अभी भी एक लीड करते हैं डिसेंट्रलाइज फाइनेंस में। ये मतलब अगर आप डिसेंट्रलाइज फाइनेंस के ऊपर कुछ बेट खेलना चाहते हैं, आप ये सोचते हैं कि डिसेंट्रलाइज फाइनेंस आगे चल के ग्रोथ करेगी, तो अगर आप यूनी में नहीं है तो इसका मतलब आप लीडर में ही नहीं है। आप लीडर, जो मार्केट का लीडर है, आप उसी में नहीं है। तो आप देख सकते हैं कि इथीरियम के कंपैरिजन में भी कितना ज्यादा ड्रॉप कर रखा है। अगर हम लोग परसेंटेज वाइज देखें, और जैसे कि मैंने आपको पिछली वीडियो में भी बताया था कि मेरा मेन मकसद इस समय पे ये है कि मैं ज़्यादा से ज़्यादा अपने इथीरियम को ग्रो करना चाहता हूँ। तो इथीरियम को ग्रोथ करने के लिए भी आप देख सकते हैं कि कितना ज़्यादा ग्रोथ यहाँ से आपको देखने को मिल सकती है। मतलब अगर ऑल टाइम हाई हम लोग देखें यूनिस्वैप का, तो ये यहाँ से 300%, 3 टाइम्स, मतलब यहाँ से डाउन है इथीरियम के कंपैरिजन में। आप ये देख सकते हैं। मतलब अगर कोई यहाँ पे 10 इथीरियम इन्वेस्ट करे और यूनिस्वैप इथीरियम के कंपैरिजन में फिर से उतनी ग्रोथ दिखाए, तो उसको 3 टाइम्स ज्यादा इथीरियम वो कमा सकता है। ये मौका मिल सकता है उसको। और सोली भी आप अलग से यूनिस्वैप में, यूनिस्वैप एक ऐसा प्रोटोकॉल है डिसेंट्रलाइज फाइनेंस का कि आप इसको लॉन्ग टर्म होल्ड कर सकते हैं। अगर आप इथीरियम के कंपैरिजन में भी ना सोचें, तो आप ऐसे भी इसको लॉन्ग टर्म होल्ड कर सकते हैं। कोई बड़ी बात नहीं, बहुत ही अच्छा प्रोटोकॉल है। आगे चल के बहुत अच्छी प्राइस जाएगी, बट अभी इसकी प्राइस बहुत डाउन है। सीवियरली अंडर वैल्यूड कॉइन है इस समय पे। तो ये तो रहा यूनिस्वैप का प्रोटोकॉल। दूसरा प्रोटोकॉल आप जानते हैं, ये है बीएनटी का चार्ट। और बीएनटी में मैंने ऑलरेडी एंट्री ले रखी हुई है। तो ये दूसरा प्रोटोकॉल हो गया जो कि डिसेंट्रलाइज फाइनेंस में मुझे लगता है लीड करेगा और यूनिस्वैप को अच्छा खासा कंपटीशन दे सकता है आगे चल के। तो अगर इसकी बात करें हम लोग और प्राइस रेंज को देखने की कोशिश करें, तो इस समय पे जहां पे ये चल रहा है, यहाँ से अगर ये अपने ऑल टाइम हाई पे जाता है, तो यहाँ से ये आपको 350, आप मान के चलिए 400% का रिटर्न देगा। जहां तक मैं मानता हूं कि अगर आप इतना एम्बिशियस अगर नहीं भी होते हैं, तो भी अच्छा खासा रिटर्न ये प्रोटोकॉल आपको दे सकता है, अगर आप इथीरियम में भी कन्वर्ट करने की सोचेंगे आगे चल के तब भी। और प्राइस में भी काफी ज्यादा गिरा हुआ है बीएनटी इस समय पे। तो ये है मेरी सेकंड पिक, जो कि मैंने आपको कई बार मैंने इसके बारे में बताया भी है आपसे, तो इसको ज्यादा आज इंक्लूड नहीं करेंगे। तीसरा जो मेरा पिक होगा डिसेंट्रलाइज फाइनेंस में, जो सीवियरली इस समय पे अंडर वैल्यूड है, वाईएफआई। आप जानते हैं वाईएफआई ने एक समय पे $40,000 के करीब करीब रीच कर चुका है वाईएफआई। और इस समय पे 10,000 से भी नीचे चल रहा है। मेरे ख्याल से $8 या $9,000 के करीब करीब ये चल रहा है। और अगर इसको आप देखिए, ये इथीरियम के टर्म में है, क्योंकि मैं इथीरियम के ही इस समय पे आप कह सकते हैं कि उसको ही मैं वॉच कर रहा हूँ, ज्यादातर उसको ही बढ़ाने की कोशिश में लगा हुआ हूँ। इस वजह से मैं इथीरियम के चार्ट में कंपैरिजन दिखा रहा हूँ आपको। तो आप देख सकते हैं कितना सीवियरली गिरा हुआ है इथीरियम के कंपैरिजन में। तो ये मेरे 3 पिक्स हैं, और ये मैं मानता हूँ कि 3 आगे चल के जब भी ऑल्ट का रन आएगा तो बहुत ही अच्छी तरीके से ये रन अप देखने को मिलेगा हमको इन तीनों में। और अगर इस वाईफाई की बात करते हैं हम और ऑल टाइम हाई की बात करते हैं तो यहाँ से मेरे ख्याल से 100% आपको गेन देखने को मिल सकता है। फिर से अगर उसी तरह का ट्रेंड हम लोग को वाईफाई में देखने को मिलेगा। वाईफाई एक बहुत अच्छा डी फाई का प्रोजेक्ट है क्योंकि इसके पीछे एक बहुत अच्छी बैकिंग है। आंड्रे क्रॉन्जी जो कि हैं, जिनका नाम ही आप कह सकते हैं काफी है डीफी में, और इन्होंने ही एक तरीके से बहुत बड़ा मूवमेंट लेके आए हैं डिसेंट्रलाइज फाइनेंस में, जिसकी वजह से आगे चल के हम लोगों को कई इंप्रूवमेंट देखने को मिली। तो इसके पीछे एक बहुत अच्छी बैकिंग है। आप यूनिस्वैप के पीछे बहुत अच्छी बैकिंग है और बीएनटी भी की टीम भी बहुत अच्छी है। तो तीनों एक ऐसे प्रोजेक्ट हैं जो कि जिनकी टीम बहुत सॉलिड है, जिनके पीछे एक अच्छी खासी बैकिंग है और जो कि लॉन्ग टर्म में अच्छा खासा आपको गेन प्रोवाइड कर सकते हैं। तो ये हो गई बात इन 3 प्रोटोकॉल्स की, और ये 3 डेफी के मेरे टॉप 3 प्रोजेक्ट हैं जिनमें मैं सोचता हूँ कि आपको इन्वेस्टेड होना चाहिए इस समय पे, खासकर क्योंकि बहुत अच्छा प्राइस गिरा हुआ है। और आपको मैं ये भी बता दूं कि डिसेंट्रलाइज फाइनेंस में आपको इसी तरह इन्वेस्ट करना है। मान लीजिए आप 2 या 3-4 कॉइन में इन्वेस्ट करते हैं, पूरी तरीके से अपना पोर्टफोलियो डिसेंट्रलाइज फाइनेंस में भी इन्वेस्ट मत करिए, आपको अलग भी इन्वेस्ट करना है। जैसे मैंने आपको कल की वीडियो में बताया था कि एक एसेट क्लास में आपको पूरा अपनी होल्डिंग नहीं रखनी है, आप समझ रहे हैं, क्योंकि एक तरीके से आप क्रिप्टो करेंसी के अंदर भी डाइवर्सिफिकेशन करने की कोशिश करिए, कुछ एसेट क्लास में अपने को बांटिए इसमें। अब मैंने यहाँ पे 3 प्रोजेक्ट आपको यहाँ पे बता दिए, इनको आप लॉन्ग टर्म होल्ड कर सकते हैं। मैं पर्सनली इनको लॉन्ग टर्म होल्ड करूंगा। तो ये मेरे डीफाई के प्रोजेक्ट हो गए, और मैं अपने एसेट क्लास को हमेशा डाइवर्सिफाई रखता हूँ। भले मैं क्रिप्टो करेंसी में ही इन्वेस्ट कर रहा हूँ, लेकिन उसमें भी डाइवर्सिफिकेशन आप कर सकते हैं, रिस्क मैनेज कर सकते हैं। तो ये बात हो गई तीनों प्रोजेक्ट की। अब जिन लोगों को मैंने बताया था कि मैं कल लाइव वीडियो एएमए होने वाला है नेट हिंडमैन के साथ, ये जो कि हेड ऑफ ग्रोथ हैं बैंकर के, तो इस वीडियो को अगर आप देखना चाहते हैं तो हम इसको देखेंगे लाइव इस समय पे यहाँ पे। और जिन लोगों को नहीं देखना है वो स्किप कर सकते हैं इस वीडियो को, क्योंकि फॉर 1 आवर हम लोग इस वीडियो को देखेंगे पूरी, और मैं आपके साथ लाइव ही देखूंगा। मैंने अभी तक खुद भी नहीं देखा है इसको, तो देखते हैं कि क्या होता है। और एएमए है इनका बैंकर प्रोटोकॉल के साथ crypto.com का। तो चलिए देखते हैं इसको। और जिन लोगों के पास इतना टाइम नहीं है, 1 आवर नहीं देख सकते वो, तो वो स्किप कर सकते हैं इस वीडियो को। मैंने अपने 3 डेफी प्रोजेक्ट बता दिया आपको, चलिए देखते हैं।
Hello everyone, thanks for joining today's live video AMA. Here's me again, Maggie. I'm the head of marketing at crypto.com. I'll be your host for today's live stream. Joining us is Nate Hindman, head of growth at Bancor Protocol. Bancor is an on-chain liquidity protocol that enables automated decentralized exchange on Ethereum and across blockchains. They have recently launched the version 2 protocol, which aiming to address a couple of fundamental issues that we've been witnessing on decentralized exchange. So it's really nice to get Nate here today to help us understand a little bit more about the project itself and the recent developments. Earlier this week, we have collected a lot of questions from the community. Nate and Bancor team has selected about 20 or so to address today. If your question has been addressed, that means you have won a share of 150 Bancor network token as the prize, and is going to be distributed directly to your crypto.com app account within 2 weeks or so. So now without further ado, let's welcome Nate. Really nice to have you here, Nate.
Yeah, thanks for having me, Maggie. Great to be here.
Before we dive in to get to all those questions, would you like to give us a quick introduction about yourself and the project?
Yeah, sure. So my name is Nate. I run growth at Bancor Protocol. Bancor, as you said, is a specific type of decentralized exchange that is based on automated market maker liquidity pools. So most exchanges in the past have been based off of order books, where it's a buyer and seller, and the exchange is connecting a buyer and seller. Whereas when you have an exchange that's based off of automated market makers or liquidity pools, the traders are trading directly against smart contracts and smart contract code. And the real innovation of this is any user can provide liquidity to the exchange, whereas most order book based exchanges are only accessible to professional market makers. AMM based exchanges, any user can just store or stake their liquidity inside one of these market makers and generate fees off of trade volume on the exchange. And then I guess lastly, where Bancor really differentiates itself from other AMM or automated market maker based exchanges such as Uniswap or Balancer, is Bancor allows you to stay long on your token. So you can choose your exposure to a specific token inside the AMM. So as opposed to, say, providing Link and ETH to a liquidity pool, you could just provide Link and stay 100% long on the token. And Bancor also protects you against a sort of nasty little problem in the AMM world called impermanent loss. So it's less friction. There's less friction in providing liquidity, and there's also less risk. You're not exposed to impermanent loss in Bancor. And I think you're muted, Maggie.
Yeah, there you go. Great introduction. I'm excited to dig a little bit deeper on like how you guys can address the impermanent loss issue with your latest version of AMM. You have already given a very concise overview of what Bancor is. Let's go straight to the second question, which is about your token. Also, what our community is very interested, because we've recently listed your token on our ecosystem. What sort of utilities does the BNT token itself have, and what kind of incentives or stream of revenues can the BNT token holders get to have?
Yeah, so BNT really is what distinguishes Bancor from other AMM-based protocols like Uniswap or Balancer. And that is, in each liquidity pool on Bancor, BNT is used as the common reserve asset in that pool. So if you have a Link liquidity pool, it's paired with BNT. If you have a REN or CRO liquidity pool, each of these liquidity pools is built with BNT as the counterparty asset. So every trade in the network is processed through BNT. And that means that really half of the liquidity in each pool is either provided by BNT holders who are seeking yield on their BNT and want to stake in those pools, or it's being provided by the protocol, which sort of takes BNT and co-invests it in those pools. So that's its kind of utility as an intermediary asset. And when the protocol takes BNT and invests it on the other side of these pools, it generates a stream of revenue. So let's say, as a liquidity provider, I want to provide Link to a pool. I provide an amount of Link, and then the protocol will match the other side of the pool in BNT. And as our fees are being generated through those pools, the BNT that the protocol has provided is generating fees. And that's sort of this stream of revenue that accrues in the value, because when these fees are burned, they essentially act as buybacks that reduce the overall supply of BNT. And I guess the last real utility of the BNT token is that if you stake it inside a pool, in a liquidity pool, you get fees, and you also get something called VBNT, which is Bancor's governance token. And so you need to be providing BNT to a liquidity pool to get that governance token. And then you can use the governance token to vote on upgrades to the network and the protocol, and also to do things like whitelist certain tokens on the pool. All governance members can vote on this sort of token whitelist that gives liquidity pools certain features in the network.
So in a way, I guess, what a critical role that BNT plays is the fundamental difference between, say, Uniswap, right? And then we see a lot of traction has been generated through Uniswap in the last quarter or so. Like, as a new user getting into the AMA market, decentralized exchange, what would be your advice for them to evaluate between a platform that would rely on their own tokens like Bancor versus Uniswap, and what would be your immediate advice for new ones who are getting into this market?
Definitely, and I think that's a really important question. Something you need to understand. I'm looking at a Uniswap pool, or I'm looking at a Bancor pool. Like, really, what's the difference? As, let's say, a liquidity provider who wants to generate revenue, or let's call it APY, which is annual percentage yield. And that's what really everyone in DeFi is after, right? They want to generate interest on their tokens. So within Bancor, let's take Uniswap, because it might be something some people are more familiar with. When you're providing liquidity to Uniswap, you have to provide liquidity in at least, actually 2 tokens, right? So Uniswap usually uses USDC or ETH as the sort of connector token in its pool. So if I want to provide liquidity to the Link token in Uniswap, I have to provide it in half of Link and half of ETH, or half of Link and half of whatever is paired in that pool. So I have to split my token holdings. And also in Uniswap or Balancer or any of these other AMMs, you're exposed to this phenomenon that we can really dig into called impermanent loss, where actually your staked liquidity, when you pull it out, it can be worth less versus if you just held those 2 tokens in a wallet on their own, right? So in Bancor, it's unique in that, first, you don't have to provide liquidity to both of the assets in the pool. You can provide liquidity to just one of the assets, so you can stay long on your token. So with Link, instead of having to split it into ETH and Link, I can just provide it fully to the Link side and keep my 100% exposure to the Link token. And then Bancor's new version essentially removes the risk of impermanent loss. So there's no risk of impermanent loss for liquidity providers. Basically, I know that when I want to pull out my Link at the end of the day, I have the same amount of tokens that I initially provided. So if I provide, say, $100 worth of Link, and the Link token doubles, the price doubles, the protocol knows that when I withdraw, I can always withdraw $200 worth of value, and then the fees on top of that. So really, in the kind of Uniswap model, you're hoping that the fees that you generate, or the rewards that you generate, are going to be worth the impermanent loss that you suffer. So it's going to be greater than the impermanent loss that you can suffer. Whereas on Bancor, you're not exposed to impermanent loss. So all the fees and rewards you get are really pure profit on top of the sort of principal value that you've provided.
You're the first guest who managed to provide one answer that covers 7 questions in one go.
I just realized that we had quite a few questions that addressed this.
But I mean, it's the fun. I think it's just very crucial for us to get that right, because that's the key proposition of what Bancor is. I want to go back to my question, which you have now explained the key difference between Uniswap and Bancor. Mm-hmm. Why that still a lot of users are willing to risk the impermanent loss to go to Uniswap instead of a better alternatives, in my opinion?
Well, So up until now, they haven't had this option. So the technology I'm describing is literally like a week and a half or 2 weeks old. So previously on Bancor, if you wanted to provide liquidity to a pair, let's say the link pair again, you would have to provide half of it in BNT and half of it in link. And if you wanted to do the same on Uniswap, you would provide half of it in ETH and half of it in link. So it's obvious that the platform where the user doesn't have to purchase a token, right? As opposed to, most people have Ethereum in their wallets. So it's annoying that they have to split their link into Ethereum, but it's fine that they'll provide half and half. And so it made sense that that Uniswap would gain more traction just because more people have ETH to provide liquidity. And so what we've done is come along and say, you can choose to be exposed to which token you want to be exposed to. So that's sort of the key issue. With impermanent loss, it's a really sort of nasty problem because it's really not always apparent when you're entering the liquidity pool. When you're seeing the sort of amount of fees and that are generated by the pool, you're sort of drawn in. And actually, it's really been hard up until now for the protocols to expose this metric to say, if I had held the tokens on their own in my wallet, what would they be worth versus if I had just put them in the pool? And, to be frank, it's something that the creators of these protocols, Bancor included, it's always been a little uneasy to communicate that to users, to tell them most of the time, unless the fees are quite high, you're actually just going to be better off holding the tokens on their own. So it's not something that I would say Uniswap has been racing to, expose to users, because it really drives a stake through the whole idea of the AMMs. That's why I think it was so important that we spent so much time trying to solve this issue for liquidity providers, and we think we sort of finally have. And that's why what we launched 2 weeks ago, we think will really change how AMMs are used in the future, where it's not as much, oh, I hope that the fees will be worth enough, or I hope the rewards will be worth enough to cover this problem of impermanent loss. Now it's, I know that I'm not going to be exposed to impermanent loss after a certain period of time, and the fees on top are just going to be sort of pure profit.
As I totally agree with you. I mean, as much as the concept of decentralized exchange, that as long as you hold some tokens and then you can provide liquidity to democratize the whole exchange mechanism, there are a lot of UI related issues that still rely on projects like you guys to address, so that users can understand what they're exposed to. It also requires the protocols to evolve ongoingly, so that the loss is not going to be back on the users themselves. But that leads to the next question, right? So there are a lot of really advanced users and traders on both the centralized and decentralized exchange. And then on the decentralized side, a lot of people are doing arbitrage. It's an ongoing issue. There's a lot of debate, a lot of controversy on that. What is the position that Bancor stands? Is it something that you guys talk about or we try to avoid? Is it something that you believe that the latest version of your protocol has managed to address some of the issues that you see stemming out of this?
Yeah, so arbitrage is a totally necessary part of AMM protocols. Automated market makers literally can't function, for the most part, without arbitragers that do the balancing of the prices and that make sure that the prices that are being shown are matching the prices on external markets. And furthermore, when a pool is arbitraged, it generates a fee in that pool that is earned by liquidity providers. So I would say, first off, arbitrage is definitely encouraged on Bancor and throughout the AMM ecosystem, but there's a big, big but. And the but is that you can end up as an AMM liquidity provider and as an AMM protocol paying arbitrageurs too much. And they perform this necessary service that's sort of seen as a cost, but we do believe that liquidity providers don't have to pay as much to these arbitrageurs in order to balance the prices on the AMMs. So so I would guess I think it's too strong to call them a necessary evil, but it's kind of like, I'm thinking they are totally necessary to AMMs, but you just don't have to pay them as much. And really, the reason impermanent loss occurs is because you pay arbitrageurs too much. The money that is being really generated in many times by balancing out these pools, because it's quite lucrative for them, is really just going to them. And the liquidity providers need to be, should be earning more, and more should be going to them because they're taking on this sort of greater risk. So, so that's definitely something that's like heavily in sort of research, like how do we not pay arbitrageurs as much, but still ensure that AMM pools are efficient and updating and reflecting the external market prices as soon as possible, not offering bad prices. There's all sorts of very interesting research to be done there on how to pay arbitrageurs less. Effectively, what we've done to really remove the risk of impermanent loss that is caused by arbitrageurs is we've effectively said with our protocol, what happens if you distribute the risk of impermanent loss across a wide array of pools? So it's not just one pool that's suffering impermanent loss, and we can discuss the sort of the things that really cause it. But we're saying, as a protocol, if we can somehow socialize the loss so that the Bancor protocol is both taking on the risk of impermanent loss, but also able to benefit from the reward, and that is these fees. And if on a sort of network-wide basis, if the fees are greater than the cost of impermanent loss, then it means that the protocol is profitable in taking on this risk of impermanent loss. So what we've done is we've shifted the risk of impermanent loss from liquidity providers to the Bancor protocol. And this is what V2.1 is all about, is this risk-taking mechanism and how it can generate tons of actual revenue for the protocol as well through these sort of protocol co-investments that are paid on each pool.
Okay, so it sounds like there's also a governance component in that, right? And then you just mentioned about VBNT, which grants the rights for token holders or to vote, to make decisions on things like that you just mentioned. Maybe you can elaborate a little bit more to our community.
Yeah, so the process would be, let's say, I want to participate in Bancor governance. I believe in the network, and I think as the network grows, the asset will be valuable to hold. I can pick a pool on Bancor, and let's say the Link liquidity pool. I think that Link is a popular token and that it will get traded a lot in the near future, meaning that as the Link token is getting traded on Bancor, it's generating trading fees. So I can choose to say, purchase BNT. I can stake that BNT inside the Link liquidity pool. So I'll be generating 50% of all the fees that are generated on the Link liquidity pool as a BNT liquidity provider to that pool. And when I stake my BNT in there, I receive VBNT, which really represents my ownership of the Link liquidity pool and of the fees that are generated there. And so then I can use this VBNT as its sort of accruing value from these trading fees, and also use it to vote on changes to the Bancor protocol, so protocol upgrades. And also a real key part of our governance is something called the V2.1 whitelist. And that are the tokens or the pools within that whitelist these are the pools that are eligible for impermanent loss protection or impermanent loss insurance, and also where liquidity providers can have single asset exposure, those two key features. But they're not available to any token on Bancor, any pool on Bancor. They're only available to those pools within that whitelist. And the whitelist is controlled by governance. So, the two key kind of actions as a governor or a VBNT holder in Bancor is first the sort of protocol upgrades, and also to vote on this whitelist of which tokens do I think should receive impermanent loss insurance and protection, and also single asset exposure.
So at the moment, is there any pool that has been whitelisted yet?
Could you say that again?
At the moment, is there any pool that has been whitelisted yet?
Yeah, so I think right now have something like 40 pools that have been whitelisted. There was an initial whitelist of 60 pools that 20 of them are just kind of waiting for enough activity to be whitelisted. But I think if you go to Bancor.network, you can see just on the interface which pools have this sort of protection symbol, this shield. And these are pools that are protected from impermanent loss and also included in this whitelist. So there's probably about 40 of those pools right now. And if anyone wants to have a pool added to that whitelist, and you can still create any pool on Bancor. It's still a permissionless system, just like Uniswap, just like Balancer. But then what you could do is you could get everyone excited about this new pool that you created, about this new token that you think is going to get a bunch of trade volume and profit that you want to support the liquidity of, and then you have someone propose. So you could propose it, or someone propose on your behalf to have the token added to the Bancor whitelist, and then all VBNT holders can vote on whether that token gets added. And the quorum is set right now that 20% of staked VBNT needs to approve a proposal, and so they would need to approve the token in order to be listed.
Sounds to me this is a very good feature and incentive for users who are new to decentralized exchange. Do you believe that now the version 2.1 is the version that would be really suitable for beginning DEX traders?
Yeah, it's funny you mentioned, I would say in the first couple of years, and I've been with Bancor since 2018, we were always a little hesitant to encourage people to provide liquidity to the system, because it's fairly high risk. If one of the tokens in the pool goes up by a lot, then what the AMM pool is effectively doing is it's selling off that token. So like I said, you would suffer this impermanent loss, and you would have just been better off holding the tokens in your wallet on their own. So you're really making a bet that those fees will give you that yield. It felt a little too high risk. And now we're at a stage where, as a liquidity provider, you can be sure that after a certain number of days, you will be able to pull out the same exact number of tokens that you provided, just like any sort of staking product. And so I would say that, if you've been sitting on the fence sort of about AMMs and it's a little hard for you to understand, and you're kind of worried about the sort of high risk of impermanent loss and losing your long position or losing some of the tokens that you put in there, Bancor is really a sort of risk minimized solution for you. And this really does feel like where users can actually participate as passive liquidity providers. And what I mean by passive is, you think about market making, the history of market making in the past, it requires you to be active. You're constantly like changing certain parameters in the pool. in your market maker. You're taking advantage, you're deciding which buy orders and sell orders you want to program the market maker to do. So it's like a high level of technical technical skill, and often you need a lot of capital. Phase two, so really with AMMs, is we had this promise of, just you have your tokens in your wallet, just stake them in this contract. You don't need to do any manual market making. it's just your passive, we called it like lazy liquidity. You could just be lazy and like leave it there, right? The contract will do the buying and selling for you. And it's all on chain and you can monitor it. But the real promise of that was really screwed up when everyone started discovering this issue of impermanent loss. And so I think we're finally at a stage where you can truly be a passive market maker and your liquidity can actually be lazy liquidity without this exposure to these high risks that you would get in, say, like a Uniswap or a Balancer or the previous versions of AMMs that we've had in the past couple of years.
I think the term you use is very precise, passive market maker, which has never really truly been the case before. And the risk was certainly not educated enough. When I was researching about Bancor, the latest version of your protocol, want you to help clarify or tell me whether it's true or not. Other than providing, say, I have a lot of link, for example, theoretically speaking, I can provide liquidity on Bancor, but at the same time, I can also lend out on platforms like Aave. So I don't need to miss out other opportunities of the large amount of link that I provide liquidity on Bancor. Is it the case? And if so, can you tell us a little bit more about that? Because it sounds just something I would like to get on right away.
Yeah, it's really cool. It's definitely it's a feature that's in the works. It's not quite live, but effectively is you're putting your liquidity in an AMM pool, right? And whenever it's needed to perform a trade, it's used to perform a trade by the contract, right? But what if, you don't need all the liquidity in the pool to process an individual trade? Or what if there's no current trades or trading activity on the pool? You just have sort of like dead liquidity that's sitting in this pool. And so we thought, why not have the contract also lend out that liquidity when it's not being used for trades and generating the sort of yield interest that you would get from an Aave or a compound. So we can actually program the contract to, when it's not being used for trades, to be generating interest on, say, an Aave or a compound. And then, only when it's needed for a trade, for the pool to, use it for a certain trade. So there's no, as a liquidity provider, you don't have to make a choice. Do I want to lend on Aave or compound, or do I want to provide liquidity to Bancor? The contract is facilitating both. And so that's sort of like having Bancor originated liquidity being used for lending. You could also do that in reverse, where you go to Aave or compound, you lend liquidity, you generate A tokens, and then you can create a pool on Bancor where that uses A tokens, and that when it wants to process trades that are not A token trades, so say you have A link and A BNT, it can unwrap the A link into actual link to fulfill these trades, or unwrap the A BNT into, and I'm referring to Aave tokens, into BNT to fulfill the trades. So it really starts with the liquidity pool being able to wrap and unwrap between lent out assets and sort of like the raw assets that are used to fulfill trades.
This is fascinating. I bet that there's a lot of integration work that you guys are undergoing with platforms like Compound and Aave at the moment.
Definitely, yeah. It's something we're working on, and the real key is to allow for it to happen without a huge amount of gas. So to really have a gas minimized approach, because the wrapping and unwrapping can get fairly heavy. So to really have really strong contracts to minimize the gas usage on those operations.
Okay, great. So far we talked about how the version 2 has addressed impermanent loss. You don't need to provide tokens on both sides of a pool, and also features like integrating with lending platform like Aave and Compound. Have we missed out any other key features of the latest version of protocol from version 1 yet?
Yeah, I mean, I think what's also kind of interesting about the version, and something that a feature we're sort of really starting to realize now, is that What we've done is we've allowed the protocol to co-invest in pools, right? So when I bring my link to a pool, like you said, you don't have to provide the other side because the protocol is providing the BNT for the other side, the same exact value. And the protocol is generating fees off of these co-investments. And this is a real interesting value accrual mechanism for BNT. So that's kind of something that's been difficult for a lot of these DeFi protocols and specifically AMM protocols to design a value accrual mechanism where fees or some sort of value is being accrued in the token, right? Is being used to reduce its supply or do buybacks. If you take like Uniswap, for instance, and Uni, there's a lot of folks that are saying, well, we want to reduce the supply of Uni through fees that are burnt. But if you do that, then you're actually removing some of those fees from liquidity providers to Uniswap liquidity pools. So the second you turn on this protocol fee, the liquidity providers are making less money, and they will probably fork Uniswap and just create a protocol where the liquidity providers get 100% of the fees. And so with Bancor, we really figured out a way to generate a value accrual mechanism for BNT and have fees kind of burnt and reducing the supply without removing profitability from liquidity providers. And so I think that's sort of a key kind of tokenomics feature to call out. But the ones you had before were definitely the top line sort of value proposition for liquidity providers, the single asset exposure and the impermanent loss protection.
Sounds good. I personally, I'm looking forward to see how the V2 is going to help bring more traction onto the Bancor platform. I'm going to try to switch gear a little bit before we come back to the DeFi boom in the last quarter or so. I think a year ago, a lot of people thought, okay, centralized exchange is risky because of the hacking, right? Because of custody. And so decentralized, where you have your own key, you hold your own tokens, is a safer option, which has been proven not really the case, just that the risk is shifted from custody to smart contract. How to, like crypto.com, for example, we spend so much time and effort on security. We have probably one of the biggest teams in the company just to work on security. How will you assess the level of security for users to trade or stake crypto within the Bancor liquidity pool? What do you think would be the biggest risk, and what you guys are doing to address those risks?
Sure. So you mentioned that with decentralized exchange, there was a sort of shift of custody, where there's a central entity that has custody of your assets, and in a decentralized exchange that is shifted to smart contracts. Which I just want to be clear. So as a trader using a decentralized exchange, you're never giving up custody, or you're never having to, at least in AMM-based exchanges, as a trader, you're never having to put your assets anywhere. They're always staying within your wallet. And when you make a trade, it's effectively just an atomic transaction where one asset leaves your wallet, another asset comes in, and it's just like that, right? Whereas with a centralized exchange, you're giving up custodianship of your assets. The centralized exchange has control. With a decentralized exchange as a trader, you're typically using like your MetaMask or your whatever sort of Web3 wallet you use, and it's just atomic transactions. Now, where there is like a decentralized custodianship, where that's happening, is for liquidity providers. So if you buy tokens and then you say, I'm holding my tokens in my MetaMask, they're mine, right? But if I want to get interest on those tokens or yield farm, then I'll need to take the tokens and stake them into a smart contract. And in that way, they are living outside my wallet. They're as secure as the smart contract is secure. And really this, the security of DeFi is based off of how secure are the smart contracts. So we spent a lot of our time on running multiple audits on any new smart contract upgrade or any new smart contract code that gets pushed. So and that means going through many third-party audit firms, having our own internal security team, and having our own internal auditors. But listen, at the end of the day, that is an inherent risk in participating in these staking products, which is that you are only as safe as the smart contract. And also, the way these systems are working with DeFi protocols is they're so composable and so interconnected that that opens up whole new vectors of attacks that can occur. So while your protocol might be secure, the way it interacts with other protocols, for instance, we've seen a lot of flash loan attacks where people are borrowing assets on other protocols and then in one atomic transaction withdrawing from another contract. So that opens up a whole new side of security that you really need to worry about with composability. So it's both an amazing thing that, if I wanted to switch my assets from one centralized exchange to another, it's pretty tough. It's not just a plug and play thing, right? There'd have to be a waiting period where I could withdraw my assets. I would have to switch wallets. Whereas in DeFi protocols, you're usually using your MetaMask or some other Web3 wallet that you can easily just plug into, just like Facebook login or just like any sort of login system. You can plug them right into different DeFi protocols. So this composability is amazing. It's why it's been able to grow so fast. But at the same time, the dark side of composability is it can also open up a new vector of attacks. And so really it just comes down to how good are your audits, how good is your security team, and also, having proper insurance in place. So there's third-party insurance providers like Nexus Mutual, where you could take out, I want to stake my liquidity on Bancor. I'm also going to take out some smart contract protection such that if there is a hack on the smart contract, I will be reimbursed by Nexus. Bancor has its own internal insurance fund that will pay out up to a certain amount if there's a smart contract hack, which we thankfully haven't had in a while. And so, so that's really the game in DeFi. It's very important to acknowledge that as a trader, you're always in custody of you don't have to stake anything in order to trade. But if you want to get yield, if you want to be a yield farmer, if you want to get interest, you inherently do have to stake inside a smart contract where, if the protocol is fully decentralized, no one has, super privileges to that contract. And it's really a decentralized investment vehicle in that sense. So yeah, that's kind of, I know I went in kind of a couple different directions, but just wanted to clear that up.
So yeah, I think I like the way you boiled down to that. Yeah, it's actually less risky maybe for a trader because you own your custody, but for market maker, for liquidity provider, that's where the risk comes in. And again, I think it relies on protocols like you guys to ongoingly evolve until one point that the risk become a little bit more mature in a way that people can articulate. So very often it comes with being aware of what the risks are and then comes with the solution, right? I feel like this space is still developing really rapidly. And I think what happened this year with the boom of DeFi in Q2, Q3 has definitely accelerated that aspect of progress as well. It has died down a little bit. Timing wise for you guys to launch V2 is a little bit in a interesting way. How do you see that, like with the current trend, with how fast paced? Like I was talking to someone like 2 weeks ago, they were like, "Oh, DeFi is dead already." You know? From like 2 months ago, we could not talk about DeFi at all to now. Like it seems like people have already moved on. Very much like that's how I feel about the hype itself. I'm sure underneath that's not the case. How do you see this trend changing, and is it really affecting what you guys have planned in place in terms of your product roadmap, etc.?
Yeah, well, I think it's actually come at a sort of fortuitous time for us. Like it's actually kind of good timing, because what you effectively saw happen was, and I would say the yield farming craze was really based around AMMs. People finally found this kind of receptacle or container to drop a lot of incentives on. It was an efficient way for different protocols to create a token and then to distribute that token through the container, which is AMMs. And effectively, that is what fueled, I think, the DeFi summer, right, of 2022, which was just crazy. It was like we would see these smart contracts deployed by an anonymous team, and then within 24 hours is over $500 million in there. And everyone effectively, you know, became like, instead of a hodler, became like a staker. And it's all these people that were used to be like buying tokens in order to see like an immediate price growth. They realized, oh, I can take existing tokens out of my wallet and put them in something, or I can buy a new token and put it in something and just generate really crazy interest off it in a short period of time. And we, you know, protocols effectively learned how to just dump incentives on it. It's kind of like if you think of a liquidity pool as like actual container of water, we learned how to point a hose at the container and have everyone just jump in there and farm and farm and farm. But what we really didn't solve, and what went missing, is that there was a leakage problem, that there's actually this impermanent loss that can occur, that the APY or the yield that you see coming in is not what you get when you pull out. It's way less. You might not even have made, you might make a little bit of money, or you might actually lose money. And, you know, I think it's actually worth covering those sort of key risks when you decide you want to be a yield farmer in one of these pools. So you should realize that the APY you see is, in many ways, can be very misleading, right? It's based off of how it's usually calculated is they take the amount of fees that have been generated by the AMM in the past 24 hours. So that then they'll annualize it. So multiply it by 365, or if you take the past 7 days of fees, multiply it by 52, or if it's a month of fees, multiply it by 12. And then they'll take this aggregate annualized number of fees, and you'll divide it by the liquidity in the pool. And if you think about it, you're like, okay, that's sort of, I guess, how you calculate APR, APY, but that has some seriously flawed assumptions in it. And one, it's that the amount of fees or the amount of rewards that are going to be dumped on the pool are going to stay the same for a year, which in many cases is just not feasible for DeFi protocols to drop this much rewards on a pool for an entire year. It just inflates the token and can harm the token. Another is that the principal value that you stake in this pool, or that is staked in the pool, remains constant and is not subject to now what we know is this huge risk of impermanent loss, that whereas, you know, this value and the liquidity is actually reduced. So the sort of yield farming craze was a mixture of really kind of bad analytics, of also protocols discovering that they can do this yield farming, and which is actually an incredibly crucial and important strategy that I think will continue. But now people have this sort of yield farming hangover where they're like, you know, okay, that was interesting, but when I pulled out my tokens, I got hit with an impermanent loss. The asset that I was farming was actually dumped by most people that farm it. So by the time I pulled out my asset, the asset was worth way less. So the APY that, you know, that was built on, it was built on a specific price that the farmed asset would hold. But if everyone's dumping it once they farm it, that price goes down, and the APY that you saw, it's actually way less, right? And so now I think we're actually at a stage, and the reason why I say it's kind of good timing is we figured out a way to enable incentives to be dropped on a pool and enable trading fees to be generated in a pool without this kind of major risk of impermanent loss that led to a lot of yield farmers being like, this is not worth the effort it takes. And, you know, if you also think of like what a yield farmer has to do on a day-to-day basis, it's pretty scary stuff. It's very stressful to be a farmer, right? Because you're constantly having to look at your farm, and you're having to see, has one of the tokens gone up by a lot? If it has, how much money have I lost through impermanent loss? And also, is the asset that I'm farming like being dumped on the open market, whereas my LP stake is all of a sudden worth kind of way less than what I thought I was generating? And so we really designed a model where, you know, it's reliable for a yield farmer. They don't have to check it every day. They can sort of set it and forget it. And it's not being sort of like inflated by these massive rewards that protocols are dumping on the pools. And if protocols are incentivizing pools, which they are on Bancor, and we see it as a completely amazing innovation, sort of like we've basically invented paid marketing for DeFi protocols. Whereas before they didn't have a way to pay for growth, they now have a way to pay for growth by providing liquidity provider incentives. So we fully feel that it's an innovation that's going to last. But how do you make it affordable for, just like any paid advertising campaign, the amount of business that you bring in has to be greater than the amount that you're spending. Otherwise, you have to shut off that campaign. It's just, you're losing money. And we think we figured out a way that if the users are not susceptible to this impermanent loss, that the protocols themselves have to spend less money on their yield farming programs, right? So it can be more profitable for the liquidity providers with less money. And that we think will contribute to the sort of sustainability of these programs too.
I think essentially that's how like a technology matures is a necessary step. And as I have not been actively trading or providing liquidity or yield farming, whatnot, but as a observer within the crypto space, it was scary to watch because you knew that the rewards that all these yield farmers are getting, there's no way it's sustainable. But where the cracks are happening, how big it is a problem, it's just good to see that there is a correction stage that we're in right now. But then if we are comparing the total amount locked on DeFi protocols, again, versus centralized exchange, the overall amount is still relatively small, quite small actually. So, okay, now we have learned a lot. It was a great summer. All the like DeFi has moved much more than the centralized side. What do you think needs to happen next for DeFi or DAX to move to the next phase, and how Bancor is ready to capture by the time the next phase comes in?
Yeah, I think at the end of the day, if DeFi is all about from people going from being holders to actually putting their capital to work and being sort of stakers and farmers, the staking product needs to be easier to use and more reliable. You can't have such a high risk instrument and have that be used or accessible to everyday token holders, right? So we got to a stage in DeFi where in order to be a yield farmer and do it profitably, you either had to have access to like very advanced analytics, your own personal analytics, large amounts of capital, and now, that's kind of where we were headed. And now I think Bancor is really trying to return to sort of the original promise of yield farming and of AMM staking, which is that the sort of idea of set it and forget it, that you're not exposed to these huge market risks that if certain tokens go up or down in the market, it's not going to leave you with far less money. And also you don't have to, lose your kind of long position or your hold position on your tokens. It's a very seamless process from acquiring token, holding it in your wallet, deciding you want to get interest off it, putting it in a staking contract where the value, the principal value is protected, and the profits that you're getting are sort of just pure profit on top of that principal value. So it just needs to be risk minimized and frictionless in order to really be accessible to everyday token holders. And by the way, I see that those interactions maybe even happening inside a centralized environment where, a platform like crypto.com or, any centralized exchange, instead of holding the token in my wallet, I'm staking it on a DeFi protocol. Those are integrated into the centralized exchange, and I'm getting sort of risk minimized or risk-free interest on that asset. So I think that's where the next phase comes, and I think that will improve the experience not only for the retail users, but also for those institutional users who you can't just say, put your assets in a contract. If there's some sort of market movement, you could lose those assets. It's just not something you can say to an institution. And that's where Bancor is really stepping in to say, this will be more reliable and deterministic, and you won't have to worry that you're just going to get wrecked because of normal fluctuations in the market.
Very well put. I think if we scale back to look at the core issues, centralized, decentralized phasing, same sort of operational mechanics kind of issues on balancing on liquidity, fees, volatility, etc. Here it comes to the last question of the AMA. Thanks very much for your insight today. And I think Bancor is making really good traction and progress. What do you think, keep it short, yeah? What is the next biggest milestone on your roadmap that you would like to highlight to our community?
Yeah, so first, Bancor felt like it needed to solve the issues with liquidity mining rewards. And now that we feel like it's solved, we're launching a liquidity mining rewards campaign of our own, where, really we're encouraging users to come as liquidity providers, stake any token that you're long on, generate BNT rewards off of that. And we think that people will all of a sudden, both existing yield farmers and non-existing yield farmers will start to understand, like, we'll come for the rewards, but we'll really stay for the protection, right? So we'll, generate the sort of rewards from our liquidity mining, which should launch very soon, and get that very high APY, 30, 40, 50, and upwards percent, even up, hundreds of percents, and not just leave the protocol, which is what we've seen and happen in so many yield farming rewards. You just get the rewards, then you leave. But to realize that you can still generate quite a bit of yield off of the trading fees that happen on the network, and your liquidity is protected. If you stay in the pool for a certain number of days, then you will not have any impermanent loss risk. And that's something that we really haven't seen. So we're excited to put what we think we've solved into practice and launch the BNT liquidity mining campaign, and really see a flood of liquidity come to the system so that we have sort of billions locked in our contracts and generating very high trading volume and very high protocol revenue for BNT holders.
Sounds great. Thanks so much, Nate, for your insight and your time today. Here is Come. We have just walked through all of the questions. And also huge thanks to the community who have submitted really great questions for Nate earlier this week. Once again, as a gentle reminder, if your questions were just addressed by Nate earlier, that means you have won a share of 150 Bancor network token, and the prize will be distributed directly to your Crypto.com app account within 2 weeks or so. Before closing, Nate, any final words that you would like to share with the Crypto.com community?
Sure. If you're curious about staking in Bancor pools, or just want to try some trading on Bancor, go to Bancor.network. You'll see a list of pools. You'll see the sort of APY you can get in each pool, and you'll see how to protect your position and track your position. So I really encourage everyone. You can do it. There's no minimum. You can do it with as little as, say, like $1 or how much ever the gas is, and you can sort of generate just interest off of the tokens you're holding and stay long on those tokens too. So Bancor.network.
All right, and also in the meantime, follow Bancor on Twitter, and the handle is Bancor, and Crypto.com. The handle is CryptoCom, to stay informed about upcoming events and updates. Hope to see you soon again and to talk about more of your progress in the near future.
Thank you so much. I think for all your great questions. It was awesome. Thanks.
Thanks. Until next time, everyone.